I talked about this over the last couple of weeks, saying gold is on fire. Everybody's talking about it, but it's actually hit the level we want. Like this is the area where I'd be moving your stop up, locking in gains. We actually locked in some gains on our GLD position about a week or two ago as we got up to these levels. And so I'm not expecting gold to go higher. It might go higher, but overall, the cycle to me for gold is more or less done. I believe this high we're seeing right here is equivalent to the high that we saw just before the last financial reset, where gold fell 34%. I think we're going to see gold probably fall and correct when the market does have a bigger correction.
Gold appears to be approaching a significant resistance level, according to analyst Chris Vermeulen, chief market strategist of the Technical Traders. This level aligns with a supercycle pattern that dates back to the early 2000s. Gold began its ascent in this supercycle around 2001, peaked in 2011, and hit a low in 2015. Vermeulen's analysis suggests that the current peak might be comparable to the one seen before the last financial reset, when gold corrected by around 34%. Given these patterns, a similar correction could be on the horizon if broader markets decline. Gold prices rose by over 1% on Thursday, bolstered by a weaker US dollar and a widely expected Federal Reserve interest rate cut of a quarter percentage point. Spot gold reached $2,691.36 per ounce, up 1.2%. On Friday during the Asian trading session, gold prices struggled to maintain the momentum gained in the previous day's rebound from the 50-day simple moving average near $2,643. This level represents a 3-week low, and selling pressure has emerged. However, the gold market appears resilient, showing signs of recovery at the critical 50-day exponential moving average. The sustained uptrend suggests that traders may continue buying on dips, a pattern supported by recent gains despite U.S. election results. Although Vermeulen anticipates a potential correction in gold due to cyclical market factors, the metal's overall upward momentum remains intact, with continued government spending and economic uncertainty providing additional support. Looking ahead, Vermeulen foresees limited upside for gold in the near term and expects a possible pullback within the coming year. However, with ongoing macroeconomic factors, including U.S. spending policies and Fed interest rate cuts, the long-term outlook remains bullish for gold. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
I think gold is putting in a major top. This is definitely a bigger move than normal for gold, but also today, the day we're recording this, is a bigger day for like everything. The Russell 2000 up 6% in one day, so this is definitely a huge day. To me, gold is hitting a major resistance level that you and I have touched on a few times before, David. We're looking back at this super cycle from back in early 2001, where we saw the super cycle start to put in a low, all the way to the 2011 market top or gold top, and then the low back in 2015. If we were to just draw this out, this is a pattern I have been talking about for years. This price level, based on this rally and this pullback, we're looking for gold to rally to about 2100. And then if it pauses and pulls back there, we should go all the way up to 2750. I talked about this back in 2019 when we broke out into a super cycle, saying these are the next two thresholds. We paused at the 618, which is a very, very bullish sign for gold. If it pauses when it hits this orange line, that is a sign that we're probably going to go and hit that 100% measured move to the upside. And so we have hit that in gold. So I talked about this over the last couple of weeks, saying gold is on fire. Everybody's talking about it, but it's actually hit the level we want. Like this is the area where I'd be moving your stop up, locking in gains. We actually locked in some gains on our GLD position about a week or two ago as we got up to these levels. And so I'm not expecting gold to go higher. It might go higher, but overall, the cycle to me for gold is more or less done. I believe this high we're seeing right here is equivalent to the high that we saw just before the last financial reset, where gold fell 34%. I think we're going to see gold probably fall and correct when the market does have a bigger correction. I think this whole election cycle is going to push money into the stock market and kick the can down the road, and the economy cycle down the road a little bit longer. I don't know how long, but I do feel eventually we're going to go into these massive cycles that happen in the economy and mentality and just business cycles. you can't really stop them. You can drag them out and kick them down the road a little bit, but eventually it's going to come into play, and I think gold will come down. So I don't see a lot of upside potential in gold in the near term. I'm more so expecting it to pull back over the next year. It is definitely a concern. You start raising tariffs on everything, like everything that comes into North America, I swear, is from another country. We don't make
Sure.
anything here in North America, it feels.
Yeah.
So it could definitely add to inflation. I think if we have high inflation, it might spur people not to save, that they're going to be like, I need to get into the stock market if inflation is going to be here to continue to make higher returns so I can like try and cover the inflation and all that. So it might push money into the markets versus people sitting in cash. It's going to be really interesting to see how that works. I mean, I think we're definitely dealing with pricing of everything has gone up dramatically. I mean, we were pretty stagnant felt like for like a decade or two before, and then COVID hit, and then we've done this huge step up to everything now is feels like 10x priced. And I'm hoping some of that will fade down a little bit as we go into hopefully some type of recession. But people are going to have to find sources to make money. They're going to have to become entrepreneurs, or they're and find some ways to benefit, help other people, so they can also generate money or be involved in the stock market. So it could drive people into the stock market. They don't want to stay in cash if they're worried inflation is going to be here. But it's really tough. As the Fed raise rates, it becomes more lucrative and attractive to sit in cash. So it really comes down to the mindset, investing and sales and how the world works. It all comes down to people's emotions. They don't do anything. Most people don't do stuff on logic. They do it on emotions. And if they're feeling good about the economy and the world and their business and they're happy, they're going to invest money.
Donald Trump's return to the U.S. presidency has boosted equity markets, driven by expectations of lower corporate taxes, favorable tariffs, and deregulation. These anticipated policies have lifted shares across several sectors, notably banks, small-cap companies focused on domestic growth, and Trump Media and Technology Group. TMTG, in which Trump holds a majority stake, saw its shares rise nearly 8% despite modest results from Truth Social, its social media platform, which reported only $1 million in revenue for the latest quarter. Trump's promise to appoint Tesla CEO Elon Musk to lead a government efficiency commission has further energized the market. Following Musk's endorsement of Trump throughout the campaign, Tesla's stock surged by 12.5% in response to this announcement. Despite potential bullish impacts on gold due to Trump's presidency, investors appear to be taking profits. According to Chris Vermeulen, any short-term rallies driven by Trump's economic policies should be met with caution, as economic fundamentals remain uncertain. More significantly, the long-term drivers of the gold market, exceptionally robust central bank buying, most notably by China, are likely to play a more significant role in shaping gold's trajectory than the U.S. presidential election alone. Let's get back to the interview.
Obviously, if he does things that are going to cut government spending, that's what Elon's trying to come in is try to cut costs without cutting jobs. They make things more efficient. Businesses maybe have some tax breaks, especially if you work within the United States or North America versus overseas. If Trump does things that stimulate more business and has perks, we're going to see people being confident in opening their wallets and spending more money because they feel like they're going to be able to make more down the road, and that'll spark the economy to continue to go. But obviously, we don't want to see unemployment keep creeping up. Sales have been relatively weak. Real estate market is struggling. Jump in yields could cause a big problem with real estate still. So when it comes to how I follow things, if Trump was to do stuff that stimulates the economy and money flow starts to pick back up, then the stock market and where the money's flowing into all the different assets, whether it's dollar, gold, utilities, stocks, bonds, whatever, when the price of enough things actually turns or moves in favor from a technical standpoint, that hey, this stage 3 top is now negated and it looks like we're starting another bull market leg higher, that's when I'll change. So we're still probably months away from that actually happening, and until then we have to trade still in caution that the market could roll over at any time. The market is great at sucking people in, and that's what this rally could do. I was talking about this the other day to subscribers, is we could see like an 8% to 16% rally in the SP 500 and NASDAQ, and the whole world piles in and just goes all in on this. And then suddenly out of nowhere, the whole cycle that I've been talking about for a long time finally kicks back into play, and everybody who's getting in is now in the stock market, and it's why it's driven it higher. And then suddenly the momentum rolls over and it fizzles and drops right out. And the whole rally was just sparked from, a
Yeah.
news driven new president getting in. So we just have to wait and see. It's not about predicting what's going to happen. It's about analyzing what is happening and then following that trend. And it is going to be a wild 4 years. I mean, Trump was in before, and then he had a bunch of years off. It's just like if you learn something new, David, and then you go to sleep and you wake up the next morning and you're a whole lot better on it and you see things from a new perspective. Well, Trump's kind of had that. He was president, he's had time off, he's reflected, and now he's coming back in probably well better armed and educated now, having being out and now going back in, that this next 4 years, and with he's got the world's biggest taxpayer
Right.
by his side. He's got the world's smartest man on his side. They're like best buddies now, it seems. So this is going to be a pretty wild 4 years, and all kinds of policies and, immigration and taxes and tariffs for China. China stuff is struggling. They're all worried now. We're going to see massive changes, and he wants to focus on making America good again. Right. So that's what he keeps saying. So I think he's going to change a lot of policies and do a lot of stuff to focus on keeping things in North America.
Gold's resilience amid fluctuating market conditions and cyclical pressures suggests it remains a valuable asset for long-term investors, especially given ongoing central bank purchases and economic uncertainties. While short-term market influences, such as political changes, may lead to price corrections, the structural demand for gold, driven by global monetary policies and central bank activity, continues to support its upward trend over the long term. How might the continued economic policies and rate cuts influence gold's stability and attractiveness as a long-term investment? Share your perspective in the comments section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.